Welcome. This is the Lifetime Cash Flow Through Real Estate Investing podcast. This is where you'll learn strategies to help you achieve lifetime financial freedom through real estate investment. Your host, Rod Khleif, has owned over 2,000 homes and apartments, and he brings experts in all aspects of real estate investment and management onto the show. Now, here's your host, Rod Khleif.
Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Rod Khleif, and I'm thrilled you're here. And I know you're going to get tremendous value from the gentleman we're interviewing today. His name is Todd Dexheimer, and he has a portfolio that will probably appeal to many of you guys that are listening, because it's not 100-unit properties. It's 1 to 4 units. It's an 11-unit, a 13-unit, a 20-unit. He's got almost 150 units, a $10 million portfolio, and very excited to get into how he's built that portfolio. He's in multiple cities and really some of his strategies. Todd, welcome to the show, buddy.
Yeah, thanks for having me on, Rod. Appreciate
Absolutely. So I know you've got properties in the Twin Cities, Minneapolis.
Yep.
You've got properties in Milwaukee, properties in Cincinnati. Why in 3 markets?
Opportunity. Twin Cities is my home base, and that's where I focused on up until just a few years ago. And I still definitely will buy here, but the opportunity is elsewhere right now is what I'm seeing. So there's just not a lot of good cash flowing properties, especially if you're buying smaller properties, but even on the bigger properties, there's not a lot of good cash flowing properties.
So I know that your larger properties, the 11, 13, 20, and 22 units are in Cincinnati. So tell me how you're sourcing, and I consider those a sweet spot right now. Anything under 30 units I think is a sweet spot because it's typically mom and pop sellers, and particularly if you can put together some sort of an off-market strategy to find those deals. How are you sourcing those deals now?
Yeah, well, so all of these deals that I've gotten came from brokers, off-market deals, brokers that I've just built relationships with. I do some marketing. I haven't actually purchased anything from the marketing, but
wow,
we send out letters quite consistently. My mom actually does that for me.
Super.
Sends out letters and we've gotten some feedback. We haven't closed on a deal. We've analyzed a few deals off of that.
How long have you been doing your own marketing?
Yeah, so my own marketing hasn't been going on for very long.
Right. Okay. All right. That's why I asked. Yep. Typically, you know that you need some repetition, you need some consistency.
Yeah.
And there's some strategies too to really hone your mailing list. If you just buy a list or just download a list directly from the assessor's office, sometimes that's not as effective. But you've had really good luck with brokers. So tell me actually, let's go back. Let's talk about when you started. I usually do that, and I kind of jumped ahead here. I got excited about talking about some of these other areas that you're in. Tell us how you got started in the business.
Yeah, so in 2008 or previous to 2008, I was a high school teacher, and that wasn't my thing. So I needed to find something else, and real estate seemed like a good fit. So I started studying the market and started in real estate, reading every book I could possibly get my hands on. And by 2008, right when the market crashed, I just saw the opportunity. And when you can buy a house for $60,000, put 20 into it, and rent it out for $1,300, $1,400, it just made way too much sense. So
yeah.
In 2008, I started buying single families, bought
at the top of the market, or was it was crashing by then?
Yeah, and so in Minnesota, everywhere it was different, but in Minnesota, it already was well on its way down. In the summer of 2008, I bought my first property. I actually bought 3 of them all at the same time, or within like a couple weeks of each other. I bought one to live in, foreclosure to live in, that my wife and I fixed up while we were living there. I bought a rental property, and then I bought a flip, and the flip was a flop. I did all the work and made like $1,000, made like $1.50 an hour. So I swore off flipping. Fast forward, I ended up doing about 150 flips over the last, since 2009.
Wow.
But yeah, so I was just buying rental properties, picking one off at a time, and then ran into where I couldn't buy anymore because A, I didn't have any money. And B, I couldn't get loans in my personal name. At that time, you could only get 4 loans in your personal name. I partnered up with a buddy who, so we bought a couple, but then we just ran out of capability and also money. So then I started flipping again. And as I would buy flips and accumulate money for down payment, I put loans on them, commercial loans. And I ended up calling, it was hard because at that time it was 2009, so banks didn't really want to lend.
Sure.
So I had to call bank after bank after bank and get "you're stupid and crazy" thrown at me so many times by these bankers, but finally, got enough banks to be able to lend on the deals I wanted to do. So I called well over 100 banks. I don't know how many.
No kidding. In your local market there in Minneapolis.
Yeah, in my local market, just called all the local banks. And Rod, I mean, knowing your show, you went through the crash and was affected by it, and most of these banks were as well. And so,
oh sure, a lot of them went out of business. Now, it's an unfortunate dynamic when the market contracts, and we're heading into a contraction here in short order. When that happens, the banks they're like ostriches. All the heads go in the ground, and they tighten up, and they actually exasperate the problem. They make it worse, and so that's one of the dynamics. So you literally called over 100 banks so you could continue on your progress in acquiring and flipping properties. I also noticed in your bio that you wholesaled a mobile home park, and it looks like you made a nice chunk of change on that too. Like what is that, $70,000-$80,000 on it?
Yeah, made a good chunk of money on that.
Yeah,
that was
that's wholesaling. Deal. So guys, wholesaling can be a great way to make quick cash. And so many people think that you just have to wholesale single family. You can he wholesaled a mobile home park. I know somebody a friend that wholesaled an apartment building literally 3 blocks from where I'm sitting here on Bee Ridge Road and made $100,000 on an apartment building. So incredible opportunity to make money. In fact, I've actually created a course on wholesaling single and multifamily that's not available yet, but that for the very reason, because I have a lot of people that listen that don't have money. And it's just such a great way, wholesaling, flipping, such a great way to make quick cash with the ultimate goal, like you've done, to buy multifamily. Use that money to buy multifamily because, that's long-term lifetime cash flow, right?
Yeah, this deal, the mobile home park, I bought it in South Carolina, and one of my brothers lives in South Carolina, and he actually was the one that found the deal. And it just kind of fell into me, and I started getting a lot of calls from people that wanted to buy it from me before I did anything to the building or to the buildings. Mm-hmm. It was a wreck. It was, I bought it for 50, I can't remember the exact number now.
Yeah, you put 55,000 on the bio. Yeah.
Yeah. So 55,000 I bought it for, and I ended up getting multiple people wanting to, they bid this thing up, and I sold it for a good chunk. I was planning on keeping it, and we were going to fix it, and I was going to rent it out. But, sometimes really with real estate, you just got to go with what makes the most amount of sense. Sometimes selling a building before you realize your full strategy makes more sense than keeping it.
Well, hey, listen, anytime you can take money off the table that easily, that's you can't say anything wrong about that. So you started in Minneapolis, then I know that you're in Milwaukee and Cincinnati now as well. Yeah. What's your current focus?
Mainly Cincinnati right now.
Okay.
Cincinnati in the area. I'm looking at all the local markets near there within a couple hour drive. So the last time I was in Cincinnati, I drove over to Indianapolis. And then I drove down to Lexington, Kentucky. I've been to Columbus, Ohio, as well as Cleveland, Ohio. So just kind of trying to stay in that area. There's a lot of good opportunity in those markets, all kind of around there.
Sure. Sure, especially in that smaller size, in the 10 to 30 unit range. I really love that size property right now. So let me ask you this: is it just you and your mom doing the mailers, or do you have any other people on your team?
Yeah, so I have a bookkeeper that does more than just bookkeeping. She does a lot of the day-to-day minor tasks, and then my mom does some stuff. And then other than that, it's just basically I've got third-party management. I've got contractors that subcontract.
So you don't do any of the management yourself. You use third party in all the markets that you're in.
So in the Twin Cities, I manage it myself, but as far as the day-to-day goes, I really don't do much. I've got team members that help me out. None of them are employees though. So my maintenance guys, my showing agents, that type of stuff. So
They're all subbed out.
they're all subbed out. Yep. But they all do a good amount of work, and it kind of works where it's pretty good synergy to be
Okay.
able to allow me not to spend all my time running around doing the day-to-day.
Well, can we dig into that just a little bit? Tell me with more specificity. You've got a showing agent. Is that like a broker, a real estate agent or something that does this on the side, or how did you actually structure how that person gets paid, and how did you develop that relationship?
So I've got several people that do showings for me, and none of them get paid. They all, yeah. So
Okay.
they all get value from me through just me, coaching them, helping them out. They want to learn about the industry. So it's young people that want to learn more about the industry. And so they do tasks for me, like showing properties, getting maintenance lists together, just small tasks that really kind of get them involved in the industry. And then I help them out on the back end by, doing phone calls with them, helping them analyze deals. So it's just a win-win situation for both of us.
Oh, good for you. That's an awesome way to add value and receive value at the same time. Okay. All right. Super. So you primarily with brokers. What sort of a due diligence model do you follow? When you find a property, how do you analyze it? Particularly like down in Cincinnati, when you're talking about some larger properties, you're up in the $1 million range in the 2022 unit properties. What are you doing to protect yourself?
Obviously, full due diligence on those. I mean, everything from auditing the rents, going through bank statements, auditing their leases, going through every single lease, making sure leases line up with what they're receiving, reading through the lease in detail to understand what kind of terms are in the lease. I require statements directly from the utility companies. That's probably the biggest thing, is making sure their books are. Anybody can put numbers on a spreadsheet and on a P&L. Doesn't mean those line up. So making sure those all line up. And then, of course, the physical inspection, going through every single unit, sending a contractor up on top of the roof to inspect the outside, all that kind of stuff. So physical inspection as well. And then neighborhood inspections. And then a lot of the neighborhood stuff is done prior to me even putting the property in the contract. But making sure the demographics fit for where I want, population's increasing, or at least staying flat, and there's potential of some increase. Checking up crime maps and crime reports, and talking to police, and just being obviously careful of the asset that you're buying, because things can look great on paper, and that's what I've learned through the years. Things can look great on paper, but if you're buying in the wrong neighborhood or buying the wrong asset type, poor management, whatever, things can go wrong and south really quick.
Sure. Okay. So how do you nurture those broker relationships? Do you just have like one broker in Cincinnati? You have several. Tell me what you do to maintain. We just interviewed a broker from Florida here. He was on the show, and he talked about this a little bit. I'd just like to get your perspective from the other side of the table.
Yeah. So I'm coming from another state. I think it's really important to meet with brokers face to face. A Zoom conference or a Skype or something is helpful if you can't be there first, but I think you need to meet them face to face. I hear so many brokers talk about, California buyers or New York buyers, and they're faceless and they don't trust them. So I think you got to go and actually see the broker and make sure they understand who you are. I think that's number one, is visiting them and telling them exactly what you're looking for, making sure they know you're real.
Right.
And then always following up with them is really important. The other thing I like to do is make sure, if they're sending you a decent deal, even if let's say they're giving you a list price and it's off on your numbers by 15, 20%, every once in a while you've got to at least put an offer in to make sure they understand you're being serious. And I'm not just saying throw an offer in and hope that you don't get it. Throw an offer in that you think if you got it, you would actually buy that building.
Sure.
Because if you don't end up getting that building, at least they know you're serious and they want to find you something. If you do get the building, well then great. Now you've got a building that you get to buy. So,
right. Okay. Well, that's very good advice. That's very good advice.
So taking action, I think, is really important. A lot of people don't take action. A lot of people, broker sends you something, it's just not going to work. A lot of people don't take action of telling that broker, look, that's not what I'm looking for, or, thanks for sending this to me. The numbers aren't quite aligned with what I need, or whatever the reason. But communicating with that broker and taking that action, I think, is a really important step in building those relationships.
Fantastic. No, that's great advice. Now let's talk about management, specifically in Cincinnati, since again, those are like 11, 13, 20, and 22. Same management company for all of those, or
Yep.
and what was the first one you bought? What was the size of the first building you bought there?
22 unit building.
Okay, so the largest one. So you bought
Yep.
this 22 unit building. What was your plan? How do they manage that property effectively? Because obviously you can't have a full-time property manager that lives on site in a 22 unit building. So tell me how your local management company handles that dynamic. I'm just curious. I mean, I know how I would do it. I'm just curious how they do it.
Yeah, I mean, you're right. 22 units isn't big enough to have on-site, which is part of the problem with buying a 22 unit. It's always nice to have on-site, but you really need 100 units,
right,
to do the on-site. So this property management company is located right in Cincinnati, so they're able to get to the property fairly quickly. They're a smaller local management company. They're not one of the big boys, which I think is helpful if you're dealing with these 10 to 50 unit properties, is you have to use a smaller company.
Agree completely. Okay.
And then, I sat down with the owner and we hashed out a plan of what kind of management, what that would look like, how often I expect them to be at the property. And our contract was based on that, which is another nice thing about dealing with local small companies, that you can cater towards yourself a little bit more. When you're dealing with these local,
you have some ability to negotiate, in other words.
Yeah,
right.
Yeah, absolutely.
Right.
And then of course you're paying a little higher fee just because of that, and
Sure.
and because of the scale. But with this company, when I sat down with them, I told them exactly, my plan, and that they wouldn't just be managing just one 22 unit building, that we'd be getting, several buildings that they would be able to manage. And within a year, we should have over 100 units for them to manage. So.
Okay. Now let me ask you this. Do they typically give one of the people in the building a discount on the rent to be the eyes and the ears at the place and pick up the trash or things like that?
Yep. Yeah.
Okay.
So we have our on-site caretaker.
Okay.
The on-site caretaker, we actually have two different kind of on-site caretakers. One of them does the yard work, the landscaping, the mowing, trash pickup, stuff like that. And they're also the eyes and the ears. And then we have the interior person that does the hallways, sweeping, cleaning, replacing light bulbs. And again, they're also a contact. So both of them get a little discount on rent, but they do work on top of that as well.
And do they get paid for that work, or is it just a discount?
Yeah, it's just a discount.
Okay, fantastic. And that's exactly how I do it. Okay, perfect. And that's what I wanted my listeners to hear, that it is possible to buy even an 11 unit like you've got there, and hire a management company if it's out of state and make it work, as long as you've got somebody there keeping an eye on things, somebody that lives there.
Yeah, I think you have to couple it with on-site and the third party.
Yep.
If you just try to do the on-site, I think you're going to get burned. If you just try to do the third party, I don't think it's going to be as effective. So
I agree. If it's out of state, it's very difficult to self-manage a small property like that. Yeah. You need somebody to go by there that's keeping an eye on the on-site person in properties of that size. But you absolutely can buy them out of state, like you've proven, and make it work as long as the numbers make sense. So that's
one of the advantages too. When you're buying these small properties, a lot of times you can get better deals on. I think you alluded to that earlier, that there's good deals still in that smaller realm between that 10 and 40, 50 unit. There's still deals out there to be had. So
yeah, that's under the radar of the big players, and it's typically not institutional sellers, typically a mom and a pop. And so there's opportunity there, opportunities for seller financing sometimes, and definitely opportunities to negotiate and be creative.
Two of the buildings I purchased, I did seller financing on.
Oh, there you go. Fantastic. And these were broker properties too.
Yes, they were. The first one, the 22 unit, it was actually not listed.
Okay.
The broker brought me to a different property that was listed, and I said, I was interested in it. Numbers didn't quite align, and he said, well, let me see if I can get you into this other building that this owner has. He might want to sell it. So I looked at the 22 unit that this same owner had, and I said, okay, I'm going to make an offer. I made an offer, and the guy said, okay, I'll sell it. So we negotiated quite a bit, and it ended up seller fine. He liked seller fine. He didn't want my offer price until I gave him the option of seller financing. Then he said, okay, now I like it.
Yeah. So he was savvy. Now, most mom and pop sellers are not savvy. They don't realize that seller financing, particularly if they're retirees. Was he an older person?
Yeah.
See,
he just retired.
Yeah. See, and I talk about this sometimes, but an elderly person, they're not going to take that money and put it in another high risk investment. And they're fully depreciated. So when they sell, they're only going to end up with 65, 70 cents on the dollar anyway. They put that in the bank at 1% and they're going to get X. Well, if they work with you and give you seller financing, they only pay taxes on the amount they collect every year, and you're going to pay them 3, 4, 5, 6% interest. Yeah. They get 3 times the amount of cash flow. I mean, it's totally a win-win. So you got an educated seller there. Most of the time you have to sell them on this and explain it to them.
Well, and I kind of did. So I asked the broker if I could call the seller, and he said, yeah, that's fine. So I called the seller and just asked him what he wanted. What?
Perfect.
What do you want? Why are you selling? Well, he's retiring. He wants to go to Florida. He wants to spend more time with his grandkids.
Right.
And so I said, well, look, I can only pay I can't remember what the price was, $440 or something like that. But I can offer you seller financing. I said, I'm going to give me your email and I'll send you a spreadsheet that tells you exactly how much money you'll make with seller financing. So I did that. I gave him the amortization schedule and I said, this is what you'll make in 5 years. And so then I called him back and, the next day and we talked more about it. And he said, well, can you guarantee me I'm going to get paid that interest? I said, well, I can't guarantee it because if I sell the property, but what we can do is if I do sell the property in the first 3 years, we can put a penalty on that and I can a prepayment then.
Oh, beautiful.
And so that's what we did. And I have no intentions of selling the property in the next 3 years, but
so he doesn't even want the money. He wants the payments, and that's.
The payments.
You can't do a better deal than that. That's fantastic. Yeah. I mean,
he's got a 23 unit building that once he's ready to sell, he'll sell it to me first.
Perfect. So let me ask you this. A lot of my listeners are brand new. They may own a couple of houses, maybe a duplex, something like that, but they want to get into these larger properties. What advice would you give them, buddy?
I would say go for it, first of all. I mean, it took me a long time. I was buying a lot of smaller properties, 1 to 4 family properties. There's nothing wrong with that, but if you really want to scale and you really want to make it happen, you've got to go to bigger units. And my goal is this is a stepping kind of stone for me, these 20 unit deals up. And once this market kind of corrects and actually even now, if the deal's right, the goal is to be buying in the 100 plus units. But yeah, I mean, if you want to get to that next level, you've got to take action.
Right.
And I think people just underestimate themselves. Right. And the possibilities of what they can do. And that's really what I did. I just kept on looking at the 1 to 4s and going, well, the numbers work. And I kept on buying them. And not saying that was bad because I built a decent portfolio and decent net worth doing that. But looking back, had I started buying larger multifamilies in 2010, 2012, I would be, way ahead of where I'm at right now. So,
yeah, no question. You'd probably be in this $70 to $100 million range instead of $10 million. And again, $10 million is better than a sharp stick in the eye. Let me just say that. But you're absolutely right. And that's what I wanted my listeners to hear. And that is just take action, guys. Push through the fear. And do that first deal. Once you do the first deal, a lot of that fear dissipates. Obviously, study this business a little bit. Don't go off half-cocked, particularly if you're buying a 20 unit or something, but take action. All right. Well, listen, Todd, let me ask you this. Part of my show is really about the psychology of success because really 80% of your success in anything is your mindset and your psychology.
Yeah, absolutely.
What motivates you? What gets you to jump out of bed in the morning?
Oh, boy. I mean, really this business does it by itself. I love it. I mean, to me, every single day for me is a Saturday. I mean, I love it. So that's a big part of it. I just love the business. I love the game. I love analyzing properties, negotiating on properties, and doing really anything to do with real estate. So I love that. But my real kind of passion is to be able to, obviously to generate income for my family and be able to have financial freedom. And that's really important. I've got 2 little kids. Who you might hear in the background. We've got a nanny that takes care of them. So I'm in my home office right now, which is great. I mean, being able to afford to do that is phenomenal.
I hope you guys are listening, okay? I hope, because I take calls from so many of you that have jobs that want what Todd has here, to be able to be at home, be with the kids, do what he loves, and you must associate pleasure with this. You have to, if you don't love it, learn to love it. I always say equate it to hunting for treasure, because that's really how I look at it in my mind. When you're out there hunting for deals, you're hunting for buried treasure.
Yeah, and it's fun.
It is. It is a friggin' blast. I absolutely love it. I get goosebumps when I think about it. I love, just like you said, negotiating, hunting, closing.
It's the whole process. I mean, for me, how I operate in my business, it's finding that kind of that hidden gem, like you said, and then taking that turd,
right,
for lack of better words, and bringing it to this, nice property that people want to live in and have pride of, and then being able to eventually down the road sell that and see everything that you've done. That's just awesome in itself.
Sure.
So then my other kind of goal, passion is to be able to give back. I want to have an education type platform where we're teaching underserved people how to be financially free. Not necessarily financially free, but to actually understand and be able to work their finances. I mean, just so they can pay the bills, because there's so many people out there that just don't know how to handle their money. They get it and they lose it immediately. And it goes back to my very first tenant that I ever had, who was on Section 8 and I truly believe she wanted to get off Section 8. She just got it and didn't want to be there. Her mom had it her whole life, and she wanted to do it, but she didn't know how. And she ended up failing and never getting to that. And I'm sure, I don't know where she's at right now, but my guess is she's still on Section 8. Because she's in that cycle, and it's hard for her to get out of it. So that's who I want to try to affect.
And there are people that have minimum wage jobs, or they're and they're in the same cycle. It's the same thing. They may not even be on assistance. They just may be struggling. And I love it. And they don't teach this stuff in school. So
and right there with what you just said is another thing that I want to do is I want to be able to build this thing into a powerful tool, and then be able to affect the schools and try to get into the public schools. I used to be a public school teacher. I taught industrial tech, but you didn't see it in the schools at all. Any very little financial education, and even in college, quite frankly.
No.
So I want to be able to get that into the schools a lot more, so kids can hear it and understand it and know how to, at the very least, know how to deal with their finances, so when they make money, they can keep some of it and they can actually pay their bills. So,
oh, I love it. I love where your heart's at, man. And I'm in the same place. That drives me as well. And good luck with that. I'm certain that you'll be a success. If you apply the same focus and energy to that as you've done to your portfolio, I'm sure you're going to do a lot of good for a lot of people. So I salute you for that, my friend. Okay, well, Todd, thank you so much for being on the show, buddy. You've added a lot of value. Hopefully, I'm sure you've inspired some of my listeners to what's possible. And let's stay in touch, my friend.
All right. Thanks for having me on.
All right. Absolutely. Take care.
You too.
Thank you for listening to the Lifetime Cash Flow Through Real Estate Investing podcast. If you've enjoyed the show, please subscribe and then take a moment to visit iTunes and leave a 5-star rating and review. For more resources to connect with us further, please visit our website at lifetimecashflowpodcast.com. Tune in next week for our next show.